what are some of the misconceptions when it comes to what you can write off and what you cannot write off?
Great question, because there's a lot of CPAs who do content that love write-offs as a term to trick people. So we're here on 24/7 Hustler. We're gonna break it down for the people, right? So technically, like starting at the basics, a write-off is a business expense. Because you're a creator and you carry your own business, anything you purchase to help you run your business is a write-off, right? People's laptops are write-offs if they create content using their laptops to edit. Same thing can be said for a food reviewer who buys the new Harvey's burger because he wants to try it out. That's a supply for a video. That's a business expense. A carpenter can't do that because he doesn't have a food reviewing business. If he buys Harvey's, that might be a meals and entertainment expense if he has a business partner, but usually it won't be a write-off, right? So that's kind of the general rule for it. So anything can be written off if it helps you with your business. Now, there are some exceptions. Items that are like too personal in nature, for example, like say, like I create content on a weekly basis. I get haircuts, right? Because I want to look good. Some people might be like, yo, you can write off your haircuts because you're using them to create content. But the thing is now, once I turn my camera off and step out to dinner with a friend or to work the next day or to go on vacation, I still have the same cut. The personal use there greatly outweighs the business use, right? So like a lot of personal appearance items like makeup is similar to it. Those are the ones that it's a gray area. I'm not going to say you can't write them off. I'm going to say it has to be like very well documented and explained. For example, if you have a contract with a brand where they tell them your upkeep has to be on point. So we expect you to have haircuts every week and stuff. That's when you have that business use, right? So those are the kind of exceptions that people don't tell you online when they talk about, oh, write off this, write off that. Because when you think about it, they have nothing to lose, right? Like they can't be sued off a YouTube video that you saw. So they'll just say whatever they can to get you to get into their membership. But be very meticulous about your write-offs as a creator. You can write off anything as long as it has business use mainly. Because it's a business expense. That's all it is. You're not getting money back from the government. You're just getting like a tax discount in terms of the taxes you owe at the end of the year.
Do you taxes is a very broad topic.
Yeah.
But to begin, do you find early on creators are intimidated by the whole idea of taxes? Because when you think about taxes, there's a lot of things that go into it. Mm-hmm. But the psychological part of handling your financial structure, especially as a creator, because it's not like any other business, because you're creating content, you're getting paid. Walk us through the psychological aspect that you face when you're dealing with clients. Mm-hmm. And when they come to you like, hey, Rony, like, I don't know that, but they got to put up a front as if they know, just so they don't seem as if like they're running some hobby or some sort of that.
Dude, it's a great question because 100% that's a common theme, that fear that creators have. They're intimidated because of what they don't know, right? Or what they are just afraid of. It's kind of like when you're a kid and your mom is bringing you a plate. You got the chicken, you got the rice, you got the veggies. You're going to go for the chicken and the rice. Like, that's fine. You're not intimidated. But the veggies, you're going to leave it, put it to the end. Same thing with taxes. Like, I work with clients who, they may have not filed for more than 1 year not because like they're lazy or anything. It's just like they've kind of had that fear over it. And what I tell them is, first, it's okay. Like, I relate sometimes. Like, we all procrastinate on something where we don't know what to do with it, so we put it to the side. But what I then tell them is the first thing you did good was to take action, like reaching out to me or reaching out to whoever. Just the fact that you were like, okay, enough is enough. I got to do this. That's good. And honestly, I just tell them, to get things back on track, it starts with having proper bookkeeping. It starts with having tax planning calls, or just keeping track of like your own situation, getting good systems in place. If you don't want to do your own like accounting and tax, get someone else to do it. You know what I'm saying? So yeah, definitely intimidation is a big factor, but anyone can get through it for sure.
What's good bookkeeping practices?
Good bookkeeping practices. That's a great question. I think the main thing is having some kind of like a month-end reconciliation. So every month you have to know kind of like how much money you made and how much you spend in your business. If you don't know how much money is coming in and out of your business, you could be thinking that you're making money, but then you're like, your cash flow is horrible. You're quote unquote like losing money. You're having a losing business. So I would say having monthly bookkeeping, if you're using a software, check at the end of the month, like how it's looking. That means like kind of categorizing the expenses. You can automate it too these days. So by linking your business bank account, I help people do this like set it up for themselves. So it's doable. It just takes a bit of effort.
Thank you so much for checking out this episode. Make sure you visit hustleovereverything.co and cop some fire merch that we have in the store. And then we'll see you in the next episode.